welcome back to another weekly market update. Today is May 26, 2023. We are super excited to bring you another week full of updates. This is Kelly coming to you on this beautiful Friday morning. Jumping right into a quick market update here as we close out this last full trading week of May ahead of the holiday weekend. The NASDAQ realized gains of nearly 4%, while the S&P lost a more muted 0.4%. And the Dow Jones lost about 3.8% as of Thursday, May 25th. On the other hand, the 10-year U.S. Treasury yield gained nearly 4%, as well as uncertainty kind of remained in the market in the unresolved talks of the upcoming debt ceiling crisis. So as soon as June 1st, we might see the debt ceiling kind of come up against its expiration date. Definitely a lot of stuff going on this week. In terms of economic data, we got the new home sales data for the month of April, a revised Q1 GDP estimate, durable goods orders, as well as the personal income, spending, saving, and PCE inflation report for the month of April. So lots of stuff going on this week, exciting week, and we are happy to bring you some more economic updates. New home sales for the month of April showed up a bit hotter than expected, up 4.1% from March's new residential home sales. So you can see up to about 683,000 in the month of April, a little bit more like the seasonal spring selling of homes that we typically see in the market. So you can see a little uptick from this muted last year or so, which is really interesting given that home prices are quite a bit higher, up to a median sales price of $420,000 as of April, and mortgage rates also being just about twice as high as they were a year or two ago. So definitely an interesting real estate market here, definitely hotter than most would expect given the interest rate environment and the slowing economy, but good things to note as we continue to monitor markets. In addition to new home sales this week, we also got the first quarter second estimate of real GDP. So that rose to about 1.3%, up from the first estimate of 1.1%. We're not seeing this negative growth yet that many are worried about, but we are definitely seeing a slowdown in quarterly growth as of the end of March. So, consumer spending, government spending, and non-residential investments drove this growth, while other categories like residential investments actually drove the decline despite the higher new home sales and other data points that we're looking at here as well. So, as we find ourselves over halfway through Q2, just important data points to look at as we continue to, dynamically monitor our portfolios and our holdings in adjustment to the current environment. We also got durable goods orders for the month of April, where the expectations were actually about almost negative 1%, while the orders actually came in at a positive 1.1% for the month of April. But after doing a little bit of digging, looking at the data a little bit deeper, defense aircraft orders were up about 32.7% in just this month of April. It's kind of how the industry works. There's certain months that there's just explosive growth or decline in those more volatile sorts of goods. But as you strip out transportation, like those aircraft orders that grew over 30% in 1 month, the durable goods orders data actually fell about 0.2% in April. So really important to look at data a little bit deeper when you are looking at these really important data of the economy in different sectors. Arguably, one of the most important data points of each month comes from the personal income, spending, and saving, as well as the PCE inflation reports that the Fed looks at pretty closely. You can see here for the month of April, personal income actually rose about 0.4%, which was on track with the PCE inflation for the month of April, but it was also up quite a bit from March's more muted 0.3% gains of income growth. On the other hand, we saw personal spending increase a more rapid 0.8%. So this is really interesting that consumers are feeling comfortable spending more or just maybe have to spend more in order to get the same goods. So in terms of personal savings rates, the actually fell about 0.4% from the month of March down to 4.1% for savings rates for consumers. So, all of this is really showing a consumer experiencing a lot of wage growth and a continued appetite to spend, despite the fact that Americans are becoming more and more aware of the political turmoil with the debt ceiling, with sticky inflation, and with just the overall slowing economy. So really important to see in terms of how consumers are doing on their income, their spending, and their saving each month. Finally, last data point of the week, the Fed's favorite measure of inflation, the PCE report for the month of April. So we saw PCE inflation come in at an annualized rate of about 4.4%, while the core PCE stayed a bit hotter at 4.7%. On a month-over-month basis, this was up about 0.4% in April, on track with the personal income growth, but also much quicker than the March's 0.1% PCE and 0.3% core PCE rate. So we're really seeing a lot of sticky inflation, a lot stickier than the Fed hopes and what most consumers hope, as well as we are really trying to get this inflation down with real interest rates higher than inflation. So that's a good sign if you're going into any CDs, any money markets, any sort of bond instruments, but also not a great sign if you are feeling it at the grocery store. So really important stuff to look at, especially as we see what the Fed will do at their June meeting. Accordingly, we're seeing that as of Friday, May 26th, the probabilities of another 25 basis point rate hike at this upcoming June FOMC meeting is up to about 64% here. So definitely higher likelihood that it will happen than it won't happen, especially given these hotter inflation metrics as the consumer seems to be doing okay. And if this was to be another rate hike here, that would pull the Fed funds rate to just about 5.5%, the upper limit, to 5.25%. So really high interest rates, highest level since before the 2008 financial crisis in about 2007, and would just definitely make a huge ripple impact on the economy as it lags through a lot of economic data. Despite all of this craziness with the debt ceiling coming up as soon as June 1st, and all of the other economic data showing a really hot economy, still some sticky inflation to tamper down on, we are really fortunate to be able to watch all of this and continue to monitor the economic news on all of these things. So thank you for tuning into our market update this week, and we look forward to providing another update next week.